Breaking news: if you live in the UK and think tax deadlines are far away, think again. Two major HMRC deadlines are fast approaching this October, and if you're not prepared, it could cost you an instant £100 fine, with total penalties rising to as much as £1,600 if you continue to delay. This is especially urgent for people in areas like Wiltshire, where many taxpayers could unknowingly fall into HMRC's penalty trap. So make sure to stick around as we break this all down and explain how you can avoid those nasty fines and keep your money where it belongs, in your pocket. And before we dive into all the details, make sure to subscribe to my channel right now for more important updates like this, straight from official sources, simplified and explained so you don't miss a beat when it comes to your money, taxes, and rights. Now, let's get right into it. The tax year for 2024-2025 officially began on 6 April 2024 and ended on 5 April 2025. That means the clock is already ticking. If you haven't sorted out your tax obligations yet, there are some critical dates you absolutely must be aware of, and October is a key month. First, there's the 5th of October deadline. That's the date by which anyone who needs to file a self-assessment tax return for the first time must register with Revenue and Customs. Miss that, and you're already at risk of penalties. And second, for those who are submitting paper tax returns, the cut-off is 11:59 p.m. on 31 October 2025. Miss that deadline too, and you'll automatically be fined £100, even if you don't owe a single penny in tax. Yes, really. Let's break this down further. First, ask yourself, do I need to file a tax return this year? According to Andrea L. Richards, accountant and CEO of Accounts Navigator, you must submit a self-assessment tax return if you were self-employed and earned more than £1,000, were in a business partnership, had to pay capital gains tax, or were responsible for the high-income child benefit charge outside the normal pay system. But that's not all. You may also need to file if you received any untaxed income, such as rental income from property, tips or commissions, bank interest, or even foreign earnings. Basically, if you made money that wasn't already taxed through your job or pension, chances are HMRC wants to know about it and you're the one responsible for telling them. Now, let's go back to that October 5th deadline. If you've never submitted a tax return before but believe you're required to this year, you must notify HMRC by 5 October 2025. That means registering for self-assessment. If you register after that date, HMRC will still give you a deadline to file, but it'll be based on when they issue your return, and here's the catch: the later you register, the tighter the window to actually submit the return without penalties. So, delaying registration could indirectly lead to fines, especially if your timeline is shortened and you miss the next step. Speaking of which, let's talk about that 31 October paper filing deadline. If you plan on filing a paper tax return, it must reach HMRC by the end of the day on 31 October 2025. And this isn't about postmarks or when you drop it in the mail. It has to be in HMRC's hands by 11:59 p.m. on that date. Miss it by even a minute, and you're instantly hit with a £100 fine, no exceptions, even if, at the end of the day, you don't owe any tax at all. That's because the penalty is for late filing, not for failing to pay. So what if you miss the paper deadline? Many people believe they can just switch over and file online by 31 January 2026, which is the standard deadline for digital returns. And while it's true that filing online gives you more time, there's a nuance here. According to experts, HMRC calculates the start of late filing penalties from the date your return is due, so missing the paper deadline means you're late, period, unless you were specifically instructed otherwise. While some situations allow you to avoid penalties if you file online after missing the paper cut-off, it's not guaranteed. So, the safest bet is to file by the earliest applicable deadline, whether you're using paper or online methods. Now let's take a closer look at the penalties, because they add up shockingly fast. Here's how the system works. If you miss a deadline, you get an automatic £100 fine. Leave it for more than 3 months, and HMRC starts adding £10 per day, every day, up to a maximum of £900. At that point, you're already facing a total of £1,000 in penalties, and that's without owing any tax yet. If your return is 6 months late, they add another £300, or 5% of the tax due, whichever is higher. And if it's a full year late, another £300 or 5% is added again. That brings the total possible penalties to £16, not counting interest or the actual tax bill. So, if you were planning to ignore it or deal with it later, it's worth rethinking that plan. These charges are not only real, they're aggressively enforced. And it gets worse if you simply don't file at all. In that case, HMRC can issue a formal estimate of how much tax they think you owe, based on any data they have. This estimate becomes legally binding, and you'll be expected to pay immediately, along with interest. If you still don't comply, things can escalate to debt collection and even court proceedings. There is a way to appeal a penalty, but don't get your hopes up unless you have a very solid reason. HMRC allows appeals only after the return has been filed, and they'll only cancel penalties if you can prove you had a reasonable excuse that lasted the entire time you were late. Think serious illness, a death in the family, or another emergency that truly prevented you from fulfilling your obligation. Forgetting the deadline or being too busy won't cut it. And even if you have a valid reason, you'll need evidence to back it up. So again, the best advice is simple: file early and avoid the risk altogether. Also, let's not forget one more important date: 30 December 2025. If you want to pay your self-assessment bill through your tax code, meaning the tax will be deducted automatically from your salary or pension, you must file your return online by this date. Miss this deadline, and you'll be required to pay the bill manually, which can be less convenient and more stressful, especially in January when everyone's finances are already stretched after the holidays. So to recap, the key deadlines are October 5th to register for self-assessment if you haven't filed before, October 31st to submit paper returns, December 30th if you want to pay through your tax code, and January 31st to file online. Missing any of these dates can lead to automatic penalties, and the longer you delay, the more it costs. At the end of the day, staying on top of these deadlines isn't just about avoiding fines, it's about taking control of your financial life, understanding your obligations, and acting responsibly. The tax system might feel confusing, but once you know the rules, it becomes much easier to manage. That's why we're here to make these rules understandable and help you stay informed, prepared, and ahead of the curve. So don't leave it until the last minute. Check if you need to file. Register early. Submit your return on time. And most importantly, don't ignore those HMRC letters when they land on your doorstep. If you found this video helpful, make sure to give it a like and subscribe to my channel so you never miss another important tax update or financial tip. I'll be covering everything you need to know to keep your money safe and stay one step ahead of penalties, paperwork, and confusion. Thanks for watching, and remember, filing early not only saves you money, it saves you stress. Stay smart, stay prepared, and as always, subscribe now so you're always in the know.